Global markets remain under pressure and futures point to a lower open on renewed European sovereign debt concerns and fear of slowing Chinese growth. The all-important GDP number and jobless claims are on tap in the U.S. I'm Taylor Schronza, and the morning call starts right now.
Good morning, I'm Scott Rutherford, Chief Strategic Officer of T3Live.com.
And I'm Jill Malandrino with The Street, and together we bring you the Morning Call Express. We have a big day on tap with the GDP and jobless claims. Before we get into that, Scott, I want to check the SPY because we're starting to check in on market composure here.
Yeah, it's a very tricky spot, and I think the economic reports that come out today hopefully will give the market some support. We've seen about a 2.5-day slide that started Tuesday afternoon, and rightly so, because we're in the end of the quarter, you're in the quarter shuffle, so a lot of people don't know the composure moving forward, so what you have to do is you have to rely on the charts. If you look here at the chart of the S&P, you will see three different trends. Here is the macro trend that we haven't even tested during this entire move all the way from October. Then you have two trends in here, so you have to realize who you are. This is your intermediate trend. This is the trend that we only tested once, and that was, I think, late February when we tested this 1340, and now where we are right here is on this little momentum trend, where we broke the 10-day, we're above the 20-day, but when we go into quarter end and we go into some reshuffling, everyone's trying to figure out, will it be more than just the average retracement that we've seen since the market started or re-energized December 20th?
Right, and then you're also starting to get the conversation now as well that Q1, that real bullish quarter, is coming to an end, and we have that sell away in May conversation coming up. We're going to check the temperature of the sectors, and the long call, we're going to go over multiple, but let's look at the Qs and the RTHs because they've really outperformed this year.
Yeah, this has been the leadership spot, so we need to figure out whether it changes. If you look here at the Qs, you will see the Qs haven't even come into the 10-day. Okay, we're coming right into the 10-day, 2 down days, no big deal. Mega cap still strong, high beta still strong. If you look at retail RTHs, you'll see also not even breaking the 10-day like the spiders did. And one more strong group I just want to show you is also obviously the banks, the XLF. Very, very strong in this upper range, holding the 10-day, not even getting near the 20-day. So as of right now, everyone's a little bit skeptical, which is okay. You're allowed to be skeptical, but it's not game over until we see some more weakness and some more distribution days.
When we jump into the trenches, we're going to go into my 2012 pick, the agricultural names. Not only is the GDP number important today, the USDA farm report tomorrow, this is the single most important number that this entire group sees all year. So we're going to look at the MOO, which is the sector ETF.
Yeah, well, this sector has been a trade. It hasn't really been an energized trade, but everything changes. That's why when you go into different quarters, you want to be aware of what's going on. And Jill says that in the second part of this year is going to be great for the ags. So as a trader, I'm going to wait for it to technically ignite. Because as of right now, it's a little bit mixed. This actually came in already to the 10 and the 20-day. It's not showing crazy relative strength, but at some point it will change when the street wants to warm up to it. So if that second half of the year does ignite, if it gets above 54, you're going to see this whole group act a lot better with a lot of your favorite stocks.
Right, and the reason why we expect some choppiness going into Q2 is weather is really going to be the variable here. We were so warm in Q1 that they've moved the planting season forward. So if we have any frost in April or May, that's an irreversible damage sort of variable we need to look at. That's why we still expect some choppiness for Q2, but that supply-demand story is really there back half 2012. For our quick hits and the long call version on Real Money, we're going to look at some of our favorite names to trade, but we have to check Apple for the Morning Call Express.
Yeah, Apple has been unbelievable. Yesterday it opened up, it came off a little bit but closed strong. So at this particular point, I think you got to be a bit careful. Obviously every sale has been a bad sale, but there are certain triggers to buy. This was the earnings strategy right here. We talked about the gap never got filled. You had a nice move, consolidated. When it broke above this pivot was another buy. When it broke this little macro pennant here, it was also another buy. So up here, I wouldn't be chasing because again, quarter end, sometimes you do see some profit taking. I think if you want to buy a dip, you could always buy the 10 and 20 day until that changes.
Okay, we'll take a look at that at the end of the day, as we do every day with Scott and the team as they wrap up the charts for us on T3Live.com, OP, and Real Money.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.